Well, good evening, folks. I do apologise that we've had to start earlier this evening than usual time, but I want to welcome you to this seminar on the changes that are happening next year, introduced by the government's the HMRC, that is all about making tax digital, which has some significant implications. I'm assuming that many of our members, their accountants, will have got this all in hand, but it's still helpful, I think, for members to be aware of the issue. And I'm very grateful indeed that I was able to follow up with colleagues I've worked with in the past in BDO, one of the world's largest finance houses, and got a couple of the BDO team on this evening, and even more grateful because after they'd agreed to do this seminar, they did let it slip that tonight was their Christmas dinner at work with their colleagues, so they refused to come online in terms of the cameras, but they are taking time out from the start of their evening together with colleagues to share this information with us and their insight. And so I'm particularly grateful to Chris and Ben, who will take us forward at this point. So over to you, Chris, and I will just keep quiet in the background here and pick up any questions that our colleagues, our members, want to fire in your direction as we go through. Please, it's going to be relatively short compared with many of our sessions, but we will pick up conversation later on after Ben and Chris have gone, if we need to take anything else, and I'm sure they will answer any questions downstream if we fire them into them, if anything arises that can't be dealt with straight away. But without any further ado, don't want to keep them from their Christmas dinner, so over to you, Chris.
Okay, thank you, David. Good evening, everybody, and welcome to the Getting Ready for the Tax Digital for VAT seminar this evening. My name is Chris Morgan. I'm an Associate Director for the VAT service, BDO, based up in our Leeds office, and I've got national responsibility for VAT services for BDO's healthcare team throughout the UK. Just a little background about myself. I've been doing healthcare VAT for close to 20 years now. I'm ex-HMRC, and I've spent a long time working in the back office within the NHS environment. So lots of experience of VAT and lots of experience of healthcare VAT specifically. What are we looking to get out of today then? We are objectives-wise going to do an introduction and an overview of the Making Tax Digital for VAT requirements. We're going to go more detail around the requirements themselves and practical delivery in terms of MTD, which will make you MTD compliant itself. Over to the next slide, which covers off the VAT return process itself. Let's take a look at the current position. Everybody's probably aware that the current VAT return has 9 boxes, and I think one of the important things to take into account here is that's not going to change. Anything that happens from a Making Tax Digital viewpoint will not alter that fact. Neither will it alter the fact that you may be on a monthly, a quarterly, or an annual VAT return cycle. That will remain exactly the same. You won't change your submission or payment deadlines. They will remain the same under Making Tax Digital, and any eligibility that you've got for VAT specials will remain the same as well. So that's good, positive news. No change around frequency, no change around payment deadlines, and submission deadlines. And if you're part of the scheme, you still remain part of the scheme. So what will change? Well, what will change will be the method of transmission to HMRC. Also, the removal of manual steps in the process of VAT return assembly itself by the creation of digital linkage of information, either out of your main software, or if you're not using software, out of spreadsheets themselves and spreadsheets. So,
sorry, Chris, can I just step in? I don't think you've changed the slide over.
I'm just about to.
Okay, sorry. Carry on.
Let's go into an overview of Making Tax Digital for VAT. Making Tax Digital for VAT, obviously, it's a flagship project for HMRC, and their ambition is that all taxpayers will be using Making Tax Digital for all of their interactions with HMRC as soon as possible in the future. VAT is the first tax to be subject to Making Tax Digital, and very much the pilot for the rest of the changes that are to come. And like I said, we anticipate there's going to be the first step in a long-term goal for the full requirement of real-time filing of individual transactions with HMRC. Making Tax Digital, it'll introduce digital filing and record-keeping requirements for VAT for businesses, and it's compulsory where you're over the registration threshold, which is currently 85,000 for your annual taxable turnover if you're a business partnership. So let's look at the timeline and timelines concerning MTD itself. Well, it was introduced as a concept back in April 2018, and it was rolled out effectively for direct taxes and for VAT itself. They started looking at pilots for both, but they quickly realised at HMRC that it was a much bigger piece than what they originally thought, and they've delayed the direct taxes rollout now until at least 2020, while they iron out all the problems using VAT as the precursor. Timeline-wise, well, people have to start to be compliant from the 1st of April 2019. That's generally all businesses, all individuals. That doesn't apply to the healthcare sector. That goes 6 months later. It's complexities. That starts on the 1st of October. Again, applicable to businesses with an annual turnover of 85,000 or more, and it affects the first calendar stagger quarter, which is effectively the June 2019 VAT return itself. Businesses will need to continue to monitor the turnover if they're not VAT registered, and it's quite important that they do so, because they need to do that on a rolling basis to make sure that should they trigger the VAT threshold, that they become registered as soon as possible after that date. Because once you're in MTD, once you've exceeded the threshold, you have to enter the Making Tax Digital VAT regime. Once you're in MTD, you can't exit if you're below the threshold at some later date. What we mean by that is, if you're over 85,000 in turnover, then your turnover at some future point drops below 85,000. Then you can compulsory deregister. You can deregister yourself that way. However, you may, for example, want to leave yourself within the MTD pilot and the MTD use of the regime, because you might want to give the appearance business-wise that you're a bigger business than what you are. So, for example, that gives your business gravitas because the turnover is 85,000. If your business is trading at 50,000 and drops to a turnover of 50,000, then you'd give the appearance externally to other people that you've got a bigger business than what you actually have. There may be commercial reasons why you'd want to leave your business within stuff. There are exemptions from making tax digital. There's not many, but insolvency is one of them. Insolvency in itself is quite labour intensive. It involves a lot of form filling, which is not really akin to online filing because it needs to be manually done. So they've exempted insolvency on that basis. They've also exempted filing on religious grounds. That's based on a VAT case a few years ago, where a religious organisation challenged HMRC that they didn't like to use the internet. It wasn't part of their religion, and they won that particular case. So HMRC have stood by that. And there are exemptions where it's not reasonably practical. For example, you may have a property or live remotely where there's no internet access, or you may be disabled or infirm by way of age. So again, those would be reasons why you may be exempt. However, just deciding that you're old isn't good enough. You have to prove it. And likewise, the same applies to disability. You will get challenged by HMRC on these points. Okay, a brief overview of the requirements for making tax digital VAT. It introduces new VAT record keeping rules and the requirement that all applicable VAT return data is digitally linked. Ben, my colleague, is going to talk through some of these concepts in a little bit more detail. So I'm going to just counter through these because I don't want to cut across what he's got to say in relation to some of these points, although he's indicating I'm quite happy for me to carry on. But basically, all that return data has to be digitally linked, transaction traced to the source. That makes sense. Obviously, if things are coming from the purchase or sales ledgers, they need to be traced back to the purchase and sales ledger, and they need to be linked right through to the transmission to HMRC using functional compatible software. The VAT return figures themselves will be submitted using an interface. The interface will allow whatever software that you're using to connect to HMRC servers, and that's called application program interface, application program interface software. And that will sit on top of your financials, if you have financials, in terms of a package, or it will sit on top of a simple spreadsheet. The digital record keeping requirement is subject to a soft landing or light touch from HMRC for the first year, commencing the 1st of April 2020. And I know Ben is going to talk about the soft landing in a little bit more detail in a slide shortly, so I'll leave him to that. But they're going to take pretty much, HMRC are going to take pretty much soft touch, light touch in terms of interest, penalty, imposition, etc. if people get it wrong. That's basically what it means. So what is functional compatible software? All VAT registered businesses have got to record and preserve records and accounts digitally within this functional compatible software that HMRC refer to. And functional compatible software is basically a software program or a series or set of programs, products that will record and preserve digital records. It will provide HMRC with information and returns from those digital records using the interface that we've chatted about earlier. And it will also have the ability to receive information from HMRC if they've got any queries. It can be bespoke financial products, which are available commercially off the shelf, or it can be as simple as a spreadsheet. That can be linked together to form any one of two or three of the requirements. But the important thing is they have to be linked together. It doesn't have to be kept in one place information-wise. It can be kept in a number of places, and that ticks the boxes from HMRC's point of view. It can be kept in a range of compatible formats. The important thing is those formats must be. Okay, a little about the application programming interface itself. We mentioned earlier, obviously, that submission to HMRC must be via this API itself, and this can be achieved by using, one of these three available options. It can be API-enabled accounting software. That's what I've said earlier. It can be a whole package. It can be bought commercially off the shelf. There are a number of packages out there. You've probably seen TV adverts for those at the moment. Advertising API compliant. All that means is it links to HMRC and it's been tested in systems. There's bridging software, for example, where it may not be API, it may not have the functionality of being API compliant. But if you put this bridge on top of the software, then put the API on top of the bridge, it will do it for you. Or you can use a spreadsheet. It's as simple as that. And where you've got a simple spreadsheet solution, you can get free APIs, or you can purchase APIs commercially and drop them on top of the spreadsheet. And provided the spreadsheets are all digital information, you can use those APIs in order to submit to HMRC. This is a slide basically showing what solutions are currently on the marketplace as of the 27th of last month. That was the last published list from HMRC. And you can see there's a mix of quite large and quite small software houses. BDO's version obviously is 0 towards the end of the list. And I know Ben is going to say something about that later on. I'm going to hand over to Ben to pick up some of the rest of the slides, and obviously, if you've got any questions, well, we can swap out seats.
Thanks, Chris. So, hi, I'm Ben Binks, also from Leeds, if you can't tell by the accent. So I work in BDO Drive, which is a department that focuses on outsourcing and business advisory. Really where this links in, it's very much on the making tax digital and actually the processing behind it. Therefore, I'll go straight into it. You've probably heard so far a lot about digital links. This is one of the key things that we mentioned with making tax digital. And in a nutshell, what it is a transfer or exchange of data electronically between software programs, products or applications without the need for manual intervention. And that is the key thing with tax digital, is to get rid of as much manual intervention as possible. So what that actually entails is, obviously we've mentioned different softwares, we've mentioned spreadsheets. All it is that it needs to have a digital link from the start to the end. So for example, if you have all your ledgers and you wanted to send them across to somebody to produce the VAT return, a digital link would include you pulling off the spreadsheet, emailing it across to somebody who can keep that email, put it into the API software and upload to HMRC. So as we've got there, we've got examples of stuff like pen drives, memory sticks, API transfer. It's very much making sure that the digital link is there. There are many different formats of doing it. It's making sure that there is a digital link all the way through. So going back to the soft landing that we mentioned earlier, because obviously the digital links is going to be one of the most, probably one of the biggest issues that you're going to face as part of this process. Now, we would say the best way to do it is literally let's get it right from the start, really. You know, if we can get these digital links set up, perfect. And what HMRC are going to do first year is give you a soft landing, whereby it's great if you can get them, but they're not going to hammer home if you're not getting all the digital links. You'll have to do it through the software in terms of uploading through an API software, so it needs to digitally link to HMRC. But in terms of how does that get into there, if it's manually processed, they're not going to penalise heavily for that. It's very much a case of get you onto the software to start with, make sure that you're uploading the information to HMRC directly through the digital link that way, but how it's processed beneath isn't as much of an issue in the first year. But as I said before, if you can do it with the digital links, it's perfect. So this diagram really just summarises what we've just spoke about. The idea is that HMRC wants to see real-time information from yourselves as the companies and be able to respond back to you in real time as well if they've got it. Rather than just seeing the nine boxes with random things in it, the idea is they actually see what's going into those things. Gets rid of a manual intervention at the end where somebody just manually types in this information, and actually they can see what's going on. So that's very much the idea of the tax digital proposition. So what is it that we need to consider? So really, this list now is, if I was sat there as yourselves thinking, what do I actually need to do? Well, first of all, you need to know what registrations you have in place with VAT. You need to understand when we actually do VAT returns, so when we're first going to get affected by the making tax digital. Do we have a system in place whereby we can do this already, or do we need to find a new solution? For example, are spreadsheets used? Can we use these already? Many people will be using spreadsheets at the moment to make their VAT returns, and they will use this data to manually type into HMRC. If that's the way you're doing it, you should hopefully be able to put that tiny bit of software over the top, take that data up to HMRC. The actual fix for that isn't as bad as it may seem. It is a case of using what you've already got. So, in terms of what records are currently kept, it is key. If it's all paper-based, how is it actually getting into the system? Is somebody just manually inputting all this data? That's one of the key things that needs to be sorted. Have we got actual electronic records that we can use to pull through the VAT returns? Is this over several sources, or is this all in one place? Another consideration that's required. And in terms of where any adjustments are usually completed, that's another key issue as well, because it's all right saying you've got all the invoices that you need to process into your VAT return, but if you've got partial exemption or something like that, how does that get in there? And it's very much making sure that even if it's an adjustment that's processed, have we got the backing for it? Now, that kind of nicely leads on to the next bit, which is digital record keeping. What actually is it that we need to do? So, to be honest, it's very much the same as what you should be doing now. So if you have a VAT inspection, you should have all of it in. It's just more now you have it digitally. So for example, have you got the business name? Do you know where they're based? Do you have the VAT registration? Is there any VAT accounting schemes in place? For example, supplies made when you're making sales to customers. You need to document what the tax point is, to know what the net value of the actual sale is and what the rate of VAT is charged. All of this information will need to be on those spreadsheets or within the API software to be able to process your VAT returns, which if you've had to do a VAT return before, is exactly the same. Vice versa, supplies received, it's just the opposite way around. You just need to record the tax point when you receive goods or services, net value of the supply and the amount of input tax that will be claimed. Well, the amount of input VAT to be claimed is not known. It very much just goes down to the accruals accounting concept, which is very much once you know what the tax point is, once you've received the invoice, record the entry and make sure that you put it into your tax returns. So all of that is exactly the same. It's just making sure how we keep our records digitally. Further on this, we've got, like, for example, reverse charge transactions. Now, we raise this as a separate item just because at the moment, some of the software that you can use for recording your data digitally doesn't allow you to do reverse charge transactions. In essence, what you need to do here is post it twice. You need to show us a supply made and a supply received. Something like this would be very much, if you do have very specific items that fall into this category, this is where we probably maybe do have a look at VAT guidance on this, because it's not a one shoe fits all type of thing. It does vary. In terms of support for each, Chris has just spoke on this one. On the reverse charge transactions, that's very much supplies from the ECs. Transfer across. Like I said before, if you do need more details on that, that's probably better to get in touch with your accountant, or if not, you can always get in touch with us. In summary, what you need actually to support the VAT return, as said previously, exactly what you've had before, but we just need to make sure it's digitally recorded. And that's the issue, is making sure it's digitally recorded, because HMRC wants to see it now rather than when they come calling. So, as mentioned before, we've got the adjustment here. So this is a little bit more around that. So, for example, you might not receive your invoice on time. Most businesses will never get their purchase invoices in on time. So what you'll have to do is make a roll, and it's that point is working out what the tax point of those items are from a VAT perspective. Where that is required, you need to make an adjustment. Yet again, it's worth knowing if you are making these adjustments, certain software providers won't allow you to do this through the scheme. You might have to download it into a spreadsheet and upload it yourself. So it's worth considering what that is and whether that works for yourself. So HMRC have stated that they will not be providing any API-enabled software to facilitate this process, which some might think that's very helpful of them. It kind of goes back to the point we made before, we're making tax digital. They wanted to do it for everything and they realised they can't. It's very much you've got to find a solution yourself. But as mentioned previously, there are many solutions out there, and it probably isn't much what you're doing. So in terms of what we're actually doing, obviously there are different software providers out there. There is the spreadsheet approach. Some people will make their own API compliant software. HMRC are releasing that list, as you saw previously, but that's all, half of that's in beta testing, because until it properly goes live, you're not going to know exactly who it is. So if you do need advice on stuff like that, you need to speak to your accountant. In terms of if you do need any specific guidance, and I know my colleague James has had a very good look through this, notice 700/22 is the reference for making tax digital for VAT scenarios. Just as a heads up, it is 27 pages long, so probably not a light read. There will be loads of information coming out, but it's very much just understanding what it works for you, and if there are any specific VAT purchases or sales that come through that are out of the normal regime, or if it's not like your standard VAT rated, if you've got imports and stuff like that, that's where it's a little bit more tricky on this. So that probably worth investigating a little bit further. So that kind of leads nicely on to, I don't know what's just happened. Move this window away from the shed. I don't know if everybody can see this, but apologies if that's just popped up. Let me see, we're just seeing if we can sort this out. Press screen share, is it? We had some technical difficulties here, I'm afraid.
You've dropped out of your PowerPoint. There we go. Oh, that's right.
Perfect. No, we always like to make sure IT is working for us. So, what this is here. Oh, sorry, I thought we had a little bit of disturbance on the line there, but literally what this slide is just a little bit of the material from my team in Google. If you want any more information, there is that's an actual data resource on there. Yeah, I'm sorry, I'm kind of not to get this, but I'm getting a lot of feedback here, so I'm hoping this isn't coming through. Just to wrap up, it is very much a case of this is a little bit more advice. If you need anything, speak to your accountant, speak to us. And that flows nicely onto it. Has anybody got any questions?
Can I, before we just sort of hand over and pick up any questions on that, I should have said at the beginning, folks, that I'm incredibly grateful that colleagues in BDO have been willing to do this, especially as it's their Christmas dinner this evening. Just to keep reminding you of that and how much they've dedicated this time for us. But as with all financial organisations, there is a limit on, they can give general guidance, but the minute we get into any specifics, that those can only be dealt with under any client relationship. And obviously, BDO welcome would like any of you to follow up afterwards if you wish to do so, but that would have to be done beyond, not just as an informal comment if you're looking for real hard-nosed advice about particular circumstances. So we need to keep the discussion fairly general in the sense of they're not giving you any of your individual personalised advice at this point. I hope I've covered that adequately, Chris and Ben.
Yes, that's fine. Thank you for that, David.
Yeah, I apologise for not getting that opinion. Now, has anybody? In some way, it's a rarely dry subject that I felt we needed to air for members, because when you look at what HMRC are currently saying about it, they're being particularly unhelpful about it in one way, and yet it's something that for many organisations will have quite a potentially large and potentially difficult transition if you're not aware and not ready for it. So hopefully that overview has been very helpful to people, just to see what's happening and why it's happening, and give you some basis to have conversations with your own accountants or whatever. But let's open up. There aren't any questions at the moment. Anybody got any specific questions that follow from the conversation so far?
David, I'd just like to add at this point that I think a lot of the focus of HMRC has been towards the accounting profession and the software providers themselves. Obviously, it's a large piece of work for the software houses to undertake, and they've been very much focused on that. I think HMRC are very much focused on proving the concept and getting people through the beta testing phases. And I think that's sort of why the general public have not come into contact to a great extent to this at the moment, which is because that focus towards the software houses and the accounting profession to get their sort of ducks lined up almost in order to support businesses. But I think you'll see, I mean, in one of Ben's slides and one of the late bullet points, the emphasis is going to change at some point, and it's going to change quite shortly, I would have thought. There's now a number of different software providers in the marketplace which are pushing APIs towards businesses, and with that in mind, their beta testing has gone quite well, and you'll see a shift and an emphasis towards social media and the .gov .uk website in order to publicise this further. And I wouldn't be surprised if we start seeing possibly even TV campaigns to follow up, especially towards the deadline itself of the 1st of April, just to remind people that, if they haven't already started this process, journey, that they need to get a move on and make themselves, and start thinking about making themselves compliant.
I suppose on that as well.
Sorry, we've got one question on here at the moment. So let me just open up that question. The question is, can you control what HMRC sees? I'm kind of assuming that the question here is based on on the concept that it's about being digitally connected directly to them. And the question, I'm guessing the question is saying, is it a one-way flow or a two-way flow? And how do you make sure that what you send through to them effectively are just the 9 records that you currently do, and you're not opening up your books in a way beyond that? Especially, you talked, Ben, you talked about how you handle reversals and things, which could make a real complex environment in terms of if they come beyond the basic 9 bits of data you've got to send through. Do you want to just answer that one?
Yeah, sure. I think the concept of making text digital is to get down to the core record, because as Ben started with his talk, he said that ultimately it's to get down to the granular level of transactions as they happen, not ultimately waiting for your 9 boxes to be produced, but ultimately to drill beyond that in time. Now, that's not a requirement at this point in time. The requirement at this point in time is to first of all connect, make sure that it's a successful connection, and to produce the data that you currently produce. Why is it digitally linked? Well, first of all, they're trying to eliminate any manual errors within these processes. And I think, people shouldn't have a worry about how deep they can go into their business. If you start to connect yourself digitally, the opportunity to have errors diminishes, because obviously you've got with all processes, the less manual user intervention you've got, the more strength you'll have in the process itself if it's correctly built. So I think the short answer is if it's not initially going to start at that level, it's going to go deeper.
I suppose if I just add on as well.
Sorry, can you move to the mic, Ben, closer? Yeah. Sorry.
So very much what it means is at the moment.
Sorry, I think that's Ben. We can't really hear that well, Ben. Can you?
Is that better?
Yes, it is. Yeah, thanks.
Perfect. So what they see the visual details on in terms of transactional level. They don't want to see at very long time as the invoice look like and all that sort of stuff. It's very much a breakdown of what the sales and adjustments that are in there. So the idea is it's just what information should be in your financials. It's not actually seeing like physical invoices at this stage. As Chris mentioned, later down the line, that might be where they go. But I think that's one step too far with very little time. It's very much just seeing the overview of it, but rather than just 9 boxes.
Okay, we're struggling a bit with the sound quality, as one person's commented. Are there any other questions to be asked here, or do we close the main part of the discussion and then pick up anything else that anybody? I think. I haven't seen any further questions coming through. I think we probably need to thank you very much for opening our eyes as to what's coming. I think that's really important. I think from my perspective, I'm kind of pretty disappointed that yet again, the sort of government initiative foisted on us at a very late stage in terms of real clarity, because for businesses like our members who are pretty busy on trying to deliver their care to their clients, sort of managing the administrative stuff in the background is something that isn't always easy to find time for. And I think, saying 3 months notice and they still haven't quite got together what's required, I think that's pretty disappointing. From a sorry, this is not a comment on you guys at BDO. I'm very grateful that you've shared with us and given us that heads up. But I did approach HMRC direct, and they said they weren't ready to talk about it yet. So they're imposing on businesses some additional work activity, which is going to get in the way of real, in our case, in our members' case, real opportunity to help their clients and patients to live a better life. So there's an element of frustration around on my side on behalf of our members, but I'm incredibly grateful that you've opened that conversation, and hopefully it's something we can continue supporting our members on as clarity comes forwards and so on. I will be passing on the contact details if anybody wants to make any specific questions from BDO or wants to follow up further. Got to say thank you to you guys and have a great Christmas evening.
Thank you, David. Thank you for the opportunity of talking to your members. That's very much appreciated by us as individuals and as a business. Just to finish off, really, if any of your members would like to ask any question of us later, please feel free to make individual contact. Are you still there?
Yes, sorry, yes, yeah.
I think Ben has played himself down a little here in terms of he's the manager in charge of a department here that looks after, that has software that actually manages this for a large amount of businesses, and it's accounting software with its own API on top of it. So I would urge anybody who's got any questions to get in touch with Ben himself.
And just touching on
Sorry, Ben, we're not hearing you again.
Me again. You can't hear me. Very much what your drive is get you onto the solution, allow you to make that. That's what we focus on. Is trying to bring in automation stuff. It's very much kind of if you need help on all areas, some advice.
We're still struggling quite a bit, Ben. I'm not quite sure I think Chris is sitting closer to the mic than you are.
It's because I'm Welsh and he's from Yorkshire, David.
Woo.
I'm just loud.
Just remember where you are.
I think what Ben is saying, everyone, basically the Zero package and Drive area that Ben looks after, it's an accounting software package. It's an end-to-end solution for accounting, which is commercially available, and it has its own API, so it's able to file directly into HMRC systems. If anybody wants to make use of that process or experience that Ben has and his team has, please feel free to give us a call or get in touch.
Great, thanks for that. I think it is one of those turning points where hopefully the vast majority of members will be able to make a relatively straightforward transition, but one or two who perhaps have been thinking about making changes, and this might be the trigger that forces them over the edge. So I'm sure they'll be in touch. So anyway, we'll let you guys get off, and I just want to pick up I know people have set aside some time, and it's been an important conversation for people. Just to pick up, there are some. One of the things that in my conversations with Chris and Ben, one of the things that I raised was there is an interesting set of conversation within the hearing care community, audiology community, about how the specific circumstances of that. And Jay and I have been having conversations, and Ben and Chris have given some insight that I've got some more material behind the scenes, but we didn't want to go into that this evening for the very reason that if we start into conversations about specific cases, then from a regulatory point of view, as financial advisors, they can't go there without there being a contract in place. Whereas Jay and I can have a conversation about what are the issues underlying it and how can we perhaps not give formal advice, but just air some of the issues. So I'm sure you're on, Jay, are you not?
David, you're still on. We're going to drop off the webinar now.
So if you guys want to get off to your Christmas lunch and Christmas dinner, and I'm very, very grateful, and we'll be in touch afterwards to if there's any further follow-up.
All right. Take care, everybody.
Great.
Merry Christmas. Merry Christmas.
Great. I will.
Yes, David, I am online.
Right.
Yeah, so I'll pick up the thread of the VAT. My favorite question: how do you charge VAT in a bundle service? So, it depends. Who is your accountant? Who you're talking to when you're trying to decide how much is the part of that bundle should be the amount for your product, and how much should it be for your services. So within a hearing care package, what should be your markup on the product? So if the product costs me £100, how do I decide how much markup should I put before I start charging VAT to the client? And obviously there will be an element which is non-VATable, the service element in that as well. Now, one accountant will suggest that you can sell any product at par or even at a loss if you wanted to, which means that I won't be passing on any VAT to HMRC because I won't be charging any VAT to the client within the bundled package. Does that make sense?
I think the answer here is, and as you say, it depends which accountant you speak with as to where they suggest drawing the line. And there is an element of, as with all professional matters, there's an element of what are you comfortable with doing, what's it right to do, where's the line that you should never cross over.
Sure.
Excuse me. I think that's really the heart of the issue that you're raising there, Jay. And it seems to me, as with all of these things, that the most important element for and again, I emphasize that this is a conversation about it. It is not a formal legal position, because I'm not entitled to be, I'm not registered as an advisor in financial matters, and nor are you, Jay. I think there's an issue here that is whatever decision you make, you need to document what your decision is. You need to set some principles and follow those principles. And if you've done that, that says how you are making the decision. It's that reasoned argument and that following of that reasoned argument and that standing by the rules that you've set, which to me is the essence of good practice. Provided you've got that practice that you've set properly documented, if you are investigated and they don't like the decisions that you've made, the fact that you've proved that you've done them in an appropriate way means they might want to change the way you work moving forwards, but they're unlikely to fine you for malpractice or anything of that nature. So I think it's just the same as clinical guidance in a way. you document why you're doing what you're doing and move forwards. Other members on the call may well have different views or have got specific advice which they want to question or share. So, kind of open it up to anybody who wants to comment on it.
Sure. While we're doing that, I know that I've asked that question from you already. So for the benefit of others who are listening, could you highlight some of those principles? How would you make a set of principles available for your business to be able to reach that decision?
I mean, I think that's what you do in conversation with your accountant, in all honesty. But my sense is that you say, what, and it comes to the heart of a question around whether or not you're thinking about bundling stroke unbundling services. But what's really important is that you recognise that, and I think it's really important to recognise that the services that members are offering, it's actually, that almost the instrument at the heart of it is not the heart of what you're offering. It's the care, the understanding, the diagnostic, the assessment, the follow-up, the coaching. All of those things are the service that you're offering, and you're offering that with almost like a sort of 3-4 year guarantee of follow-up on that. And so costing out the effort and recognizing and documenting typically what effort you're putting into that, and it's all the value add from your training and everything else. It seems to me that I certainly wouldn't want to put the line that I'm actually making a loss on the, if I bought an instrument for £100 and I'm charging, by the time I put all the package on, I'm charging substantially more than that. I wouldn't want to say that I've only paid £50 for that instrument and I'm making a loss on it. For me, that would be pushing the line, but nor would I necessarily want to mark up substantially above the £100 from a profit point of view, and therefore take that much out of the VAT, because I think the essence of everything that you're doing is about the service package, and the instrument is the product that you're putting into that package. You're helping choose that product on the basis of the knowledge and the training and the experience that you've got. So I don't have a problem with the concept of setting a relatively small bit aside for the instrument only, and saying that the majority of the cost is down to you drawing upon your experience and expertise and training.
Which is right, and I agree with that. And I think what you said about reaching a balance between what you're comfortable doing and what you should be doing is the right approach as well. But just to be a devil's advocate, I could argue that I'll give an example of where it works. So with wax removal service, a lot of the businesses will put the price point at a level which is very acceptable to the general public, in the hope that when they come to get wax removal service, they will end up having hearing care packages at the same time. So that's sort of a magnet to attract more people to help them with their hearing at the same time. So sometimes some people will charge about £40 for wax removal, where the profit margin will be very, very low when you consider the disposables. Now, you could argue the same thing about a hearing care package, which is bundled with an instrument and a care package, where you want to care for people, you want to provide that level of care. The hearing device is just an instrument to be able to provide them that care. So the most important thing for you there is the care package, which is most expensive bit within that bundle as well. And you're using the instrument just as a pull to be able to provide that care package to the clients. So one could argue that the value of the hearing instrument per se is much lesser than the care package which you actually want to sell as a business and provide as a clinician?
Again, I'm not bringing professional expertise as an accountant or anything else to this. I'm bringing a desire to be doing the right thing and recognizing that we are in the game, our members are in the game of helping people live more effective lives despite whatever difficulties they've got with hearing. If you are marketing yourself as someone who is selling hearing aids, you cannot, in my view, then say that hearing aid itself, the instrument, is just simply a vehicle for the service. If you are marketing yourself as helping people to engage in life more effectively because you're supporting them through their hearing difficulties, whatever language you want to use, then I think you're in a different place. I think what you say about your work, your offer, and what you charge for your offer have to be consistent. So do you see what I mean? If you're actually selling instruments,
sure,
then you cannot say that the service package is the totality of it. You can say it's a significant part of it, but you can't say it's the totality of it.
Sure, that makes sense.
Again, it's about, and I think one of the real challenges in life for professionals is about, and I'm a trustee at my local hospital, and I was at a trustee meeting this morning, and the chair said quite clearly, and I absolutely agree with it, but the chair said quite clearly, it's not what you say that people listen to, it's the way you behave that people respond to. And if you are, and actually cognizance of what you say and how you behave being consistent with each other, it's absolutely fundamental to the values of being a professional. So,
sure.
So market and charge and record your services in a way which is consistent.
Sure, absolutely. Well, I'm a parent of a 6 years old at home, so I know very well that what you do matters more than what you can say.
Yeah.
About what you do.
If only the government would understand that, but never mind. Sorry, shouldn't get this, should I?
All right.
Any of our colleagues, we've only got a relatively small number on, but they're staying with us. So is there anything out there that people want to raise at this point for a general discussion about our kind of business ethics, if you like, if we've got into that position? I'd really like to hear from others. We can close down easily, but it's an opportunity to share together.
You can use the hand gesture in your control panel, and we can turn your mic on so you can speak if you raise your hand in your control panel.
As Duncan's got his hand up. Duncan, let me put you. I think I've put you on to speak, Duncan. Oh, you're self-muted. Did Duncan want to add any comment at this point? Duncan Taylor, you've got your hand up. There you go, Duncan. You're on. You can speak. Hello? Are we any? There's no no other questions coming forward. Shall we? No. Shall we call it a day then and give you a earlier evening than we promised? As I indicated, it was a necessity of the very helpful response that I got from BDO that we did move it slightly earlier and kept it short for obvious reasons. But I hope it's been of use to you to see what's out there, even if it's a little one of the drier subjects that we may have encountered, I do think it was important to air what's coming, and especially to see that perhaps this is just the first stage of many other stages downstream, which is clearly not out there in public domain at the moment, but very helpful to be having experts like Chris and Ben, who are quite close to HMRC in their intentions because of what their role is in a very large finance house. This is our last webinar of the year. We haven't yet got our program for next year out, but we are going to be working on it pretty soon. Can I just take the opportunity of wishing you all a Merry Christmas, anything else about the season, but also encouraging you to be aware of the collaborative event with BAA and BSHAA that is coming in March, and perhaps more significantly for us, very central to my thinking at the moment, is the Congress, which is taking place on June 21st and 22nd. Some really exciting news to be coming out in the new year about the way that's shaping up as a very different style of event, something that I think has got more in it for everyone of our members. I'm not going to do the spoiler alert at this point because we'll have some great news out for you in the new year about that event, and look forward to many more engagements with you and continuing to deliver you important insight into what's going on. Just an opportunity again to invite any of our members who have a particular theme that they think we ought to be developing. We'd be, Jay and I and others would be quite happy to hear from you about topics that you want to have covered, and even more delighted to hear from you if you want to deliver one of those topics for us. But anything you wanted to add, Jay, before we close?
I think you've summed it up very nicely, David. Merry Christmas, everyone, and have a happy new year. We'll have the educational agenda laid out for you for next year pretty soon.
Great. So thanks all, and we'll hope to see you on these events again. Bye for now.
Bye.